Similar to ES, we have created all-time highs at 19,155. Unlike the Forex pairs, we have yet, if we are to take sell side out to the downside, we've also yet to trade into the dealing range low, dealing range high equilibrium, which I'd have to alter. This would be considered as an order block. We've closed up. The highs is 23.25. Close is, yeah. So we closed above, just a tiny bit above the highs. We spiked above the highs. So unlike ES, we wicked just as NQ, but we closed below all of the other candles, apart from these ones in March. But with NQ now, we closed above all of the other prior candles whilst taking out buy stops. Alright. Didn't take the lows out, but we did trade close enough to 50% of the close and the low for running buy stops. Have a look at the daily. What happened first? Well, sell stops were taken first. So this is this week's price action. This is last week's price action. So last week's price action, we took sell side out, traded into an imbalance in price. Didn't really get to reach the order block. Intermediate, short-term highs, and then we started to run on those from Monday, Tuesday. Tuesday was really an inside day, so you didn't take buy stops or sell side out, but that would be the indication that what would come next is going to be a big day, which would be Wednesday. Buy stops, took all time, created new time highs, and just like yes, we had two similar days where we sold off into the previous area of all-time highs, which was at 19,023 and a quarter. So you got that, and if I was to make a projection as to where price action is most likely to go, we're gonna have to go back over to the weekly time frame, and we're gonna have to take the lows from this order block because highs was created, lows to the highs. So we're gonna do this on the daily time frame. We'll take the lows. I love my Fibonacci, I'll be honest with you guys. Highs. Make sure it's pinpoint accurate. 24125. Highs is 155. And then now we can see where price could drop into, and it would still be healthy, which would be 18,698. And this is on the daily time frame. Stops, we've obviously got a massive fair value gap here, imbalance in price. You don't have to feel everything, but if you were to take the candle bodies in perspective and use the Fibonacci, just using the candle bodies, then now ideally I'd like to see more than 50% of this bullish engulfing candle field. I'd like to see that. So between 18.8 to 18.6 would be a reasonable area for NQ to drop into. If you was to head over to the intraday time frames now, This is what I'm interested in. $18,795.25, step one, which is the lows of this week to the highs of this week. The equilibrium 50% mark would be 795.75, which also coincides with a intra-week fair value gap on an hourly time frame, which I've obviously spanned out for a long period of time because it's been respected once, twice, broken 3 times, and then you rip to the upside. So if you were to drop, then that area of interest would be first, and then 18,698.75 would be next, and leave that where it is. That would be relative buy stops, relative sell stops. If you take that, then we're going to run to 795.75, and that would be my next point of interest.